Retirees often seek a haven for their golden years, and one of those destinations happens to be Texas. The Lone Star State emerges as an attractive destination because of its warm climate, diverse landscapes, and affordable living. And while there are many considerations that boost up Texas' appeal for retirees, it's the financial aspect of retirement that we like to talk about in this video. This is Intelligentsia, real life advice for practical and financial goals. Today, we want to talk about the intricacies of how Texas taxes retirees while examining the different facets of Texas's tax landscape. So let's get to it. Let's talk about Texas's state income tax and its implications. One of the many attractive traits of Texas is that it doesn't have a state income tax, which is unlike other states in the United States. Texas does not levy personal income tax on individuals, and that includes retirees. This plays a huge part of the financial health of retirees, and it allows them more disposable income, effectively letting them keep a larger portion of their retirement savings. While that's the case, it's also important to note that the absence of state income tax is just one thing in the overall picture that Texas offers retirees. The absence of a statewide income tax also includes retirement income. Understanding the implications of this is also important, as this encompasses a lot of different types of retirement income. Social security benefits, pension income, withdrawals from your retirement accounts are all generally subject to federal income tax. As a result, retirees still need to navigate the federal tax code in order to optimize the retirement strategy, as there are deductions and exemptions available to them. For instance, Social Security benefits are subject to federal income tax and are dependent on the retiree's combined income. Understanding the thresholds and planning strategies to minimize taxable income, like managing withdrawals from other retirement accounts, can help retirees with their planning. Another thing to keep in mind is pension income and how it's also subject to federal taxation. Techniques like tax-efficient withdrawal strategies, wealth conversions, and charitable giving can be instrumental in managing the tax impact of retirement income. Next, let's talk about the backbone of Texas' tax landscape, property taxes. It's important to note that while Texas does not have any state income taxes, they'll need to rely on other forms of taxation to fund their public works and government. Texas relies on property taxes a lot to fund their local government services, which include education, infrastructure, and public safety. How property taxes are assessed depends on the local government, with the rates varying significantly between counties and municipalities. Location is important, and retirees should consider the matter of property tax rates and how it varies across locations. These taxes directly impact the cost of homeownership, thus affecting their financial health and disposable income. There are some exceptions and credits that can help out, however. The programs are as follows. Homestead exemption. Texas provides a homestead exemption, allowing homeowners to reduce the taxable value of their primary residence. It's a program designed to provide relief for homeowners, including retirees, by lowering the property taxes they owe. The specific details for this program, however, like the percentage reduction and the criteria for eligibility, changes depends on your local jurisdiction. Another important tax program to ease the financial burden of seniors are Texas's property tax deferral programs. Understanding the potential financial strain that property taxes can impose on retirees living in a fixed income is crucial for Texas's overall tax scheme. As a result, they offer programs to defer property taxes until a later date, typically after the property is sold or transferred. While these programs allow seniors to defer a portion of their property taxes until a later date, retirees need to carefully consider the long-term implications, including accrued interest and potential impact on heirs. Next up, we'll talk about the sales tax burden in Texas and how it affects consumers, especially retirees. Sales tax is another important avenue for Texas to generate income. While income tax and property tax are largely dependent on one's financial standing and property ownership, sales tax applies to most consumer transactions. There is a statewide based sales tax, and it's further augmented by local jurisdictions, resulting in varying rates across different counties and municipalities. There are, however, some ways to navigate through sales tax in order to save up on your expendable income. Knowing which items are taxable and which are exempt is key to knowing how much you'll be saving up over the course of time. It's crucial for retirees managing their budgets, and while most tangible personal property is subject to sales tax, There are exemptions. Some items that are exempt from sales tax are groceries and prescription medications. The specifics of these exemptions, however, can vary, and retirees should be aware of the differences in order to make informed purchasing decisions. There's also the matter of analyzing your habits when it comes to retirement, as your sales tax can depend on how much you actually spend. Retirees often have unique spending patterns, with a significant portion allocated towards healthcare, leisure, and essential goods. That said, the sales tax for these categories changes from one another, heavily influencing the overall cost of living for retirees. Understanding your spending habits and identifying areas where sales tax can affect you more can help retirees make more informed decisions. Well, that said, we need to move on to other considerations involving retirement life in Texas, and that includes healthcare costs, estate taxes, and other important considerations. Let's start off with healthcare, as this is one of the most important things that retirees need to consider when retiring. Healthcare costs are a growing concern for retirees, as generally it costs a lot of money over time. Maintenance medicine, frequent trips to the hospital, those things alone can pile up and effectively eat away at your retirement funds. In order to make the most out of the situation, retirees could potentially deduct qualified medical expenses that exceed a certain percentage of their adjusted gross income, or AGI. This is possible through strategic planning and the use of health savings accounts, or HSAs, and long-term care insurance. All of those combined can play a huge role in effective healthcare cost management. Another thing to pay attention to are estate taxes. While it's of minimal impact, it's still important to plan for it, as Texas does not actually impose a state-level estate tax. What you should consider here, however, is the federal estate tax, as it still applies. Retirees with significant estates that they would like to bequeath to their heirs may need to maximize their tax efficiency to ensure that their assets remain largely intact when transferred according to their wishes. This involves different sorts of strategies like establishing trusts, gifting, and leveraging the applicable federal estate tax exemption. Apart from that, there's also the matter of tax credits and exemptions to maximize your opportunities. Retirees in Texas should be aware of the available tax credits and deductions. Like any other state, this can help enhance your financial situation and help you reduce your overall tax burden. In conclusion, retiring in Texas has a lot of benefits for those who have done their research and have decided to settle down in the Lone Star State. Having access to comprehensive information about the tax scene in Texas is crucial in order to take advantage of the numerous tax credits and exemptions offered to everyone, especially retirees. Knowing more about property taxes, income taxes, sales taxes, and other forms of taxation can help you enhance your living situation in Texas and assist you with making informed decisions during your stay there. Navigating through the complexities of Texas's tax scene, leveraging the available exemptions to you, deferral programs, and tax-efficient strategies are all key to reducing your overall tax burden and, as a result, leave you with more expendable income. As retirees embark on this new chapter of life, settling down in the Lone Star State lets you live a fulfilling and financially free stay by staying informed about tax considerations and seeking financial assistance from tax experts. Aside from the tax scene, knowing more about the potential expenses that will occur is also crucial, as retirees often have expenses involving healthcare, leisure, and other important considerations when settling down in your golden years. If you've enjoyed this video and found us helpful, please hit the like and subscribe button. We'd like to be able to go alongside you, and we're pumped to have you on our next video. Stay mentally healthy, and let's get financially fit together.